I think you got to make a little bit of money, build some confidence, get bigger in size, go through a period where you lose your confidence because you're trading bigger and so the losses are bigger. Learn how to tolerate that, start making money again, and do it over and over and over.
Denise Shull, pleasure to have you on the podcast. Looking forward to talk about trading, performance, of course, mindset, and probably neuroscience as well. So welcome on the podcast. Good to have you here today.
Thank you. Thanks for having me.
Awesome. I've read your book in the past. This is really what kind of brought me to invite you on the podcast and want to talk with you about trading and performance. You are a performance coach. You coach traders to really achieve the next level. You work with a lot of big fund managers as well. So I kind of want to understand a bit more about what you're doing these days and what you're working on.
Mostly I talk to portfolio managers on the phone about their decision making. It takes up most of my time. Some of them are in the equities world. Some of them are in the interest rate world. Some of them in the commodities world. Some of them are in the currencies world. They're all over the globe. Some of them have founded hedge funds. Some of them have moved from banks to hedge funds. Have a couple of private equity people. But we talk about essentially their confidence level in trades they have on and why they're either confident or losing confidence or especially confident, and help them sort out the psychological side of it, that goes beyond the mathematical, analytical side of it.
Tell me what brought you to the trading space in the first place.
The truth is I was dating a floor trader in Chicago. He was a floor trader at the options exchange. And he and some of his trading buddies actually thought I would be a good trader. And they used to tell me that I should buy it was the Chicago Board of Trade at the time. And it offered a weather future seat. And they're like, oh, you should buy a weather future seat. And I'm like, what the heck is a weather future seat? But it was the Board of Trade was trying to trade weather futures. And they went upstairs and started trading on computer networks. And I was between my master's degree trying to figure out if I was going to get a PhD and in what. And they convinced me to come learn to trade with them. And that was that.
How did that go? How did the training go?
They were actually right. I did have good instincts. Like that's what they had seen that, I didn't really understand it at the time, but after I sat down and watched equity markets, and this was in the middle 90s, every day, all day, I did start to have a reasonable ability to predict where price was going in the short term. Now I know that that's called theory of mind. You have a theory of the mind of other market participants. So actually, the guy that ran the firm told me I had the best instincts he'd ever seen. He also said he didn't think a woman could trade. So I was like, Bob, was that a compliment or not? Because I'm a little confused. But then I went to run a trading desk in New York, really for the same group of guys. And then someone asked to publish my master's paper, which was really about decision-making and the neurobiology of decision-making. And that was 2003. And that's when I learned that there is no decision without emotion. If you really don't have emotion, you can't make a decision. And I was like, whoa, well, that changes everything. So then I just started talking about that and what the science was saying about decision-making and emotion. And as I talked about it, people wanted me to talk about it more, really, in short. And here we are, 3 years later, whatever it is now.
Interesting. I mean, tell me more about this, because people have this conception of, in trading, you should just put your emotions on the side and not look at them, and not think about how confident you are or what you feel about a trade. You're saying emotions are part of every decision. So how does that play out in trading?
What the research shows is people who do not have emotion, they're brain damaged in some way, shape or form. So they actually do not experience emotion. They can't make a single decision. So we talk about keep the emotion out of it. What we really mean by that is don't just act on the emotion and the energy of the emotion. Like, that's what we really mean. So it's really control the actions, not control the emotions. And like emotions in your psyche are meant to give you information. And confidence, I mean, just in practicality, like you have to have some sort of confidence in your method of looking at the market, like some sort of belief that this is going to work, right? You don't think of that as an emotion, but it is. Maybe you experience it physically, not just in your head. But that's the big way I differentiate. Like, is it just something you think? Like, you can think, 2 plus 2 equals 4, or, in the United States, a red light means stop. Like, but things like confidence you experience physically in different people, different ways, but you have a physical sense of. And in my world, if you have a physical sense of, it basically is an emotion. I mean, it can be intuition. Scientists will call it visceral intelligence or somatic intelligence, soma being the word for the body. We all have it and we all use it. Now, some of us have more of it and do a better job of using it. And some of us don't. Um, some of us are out of touch with it, because we've been trained not to pay any attention to it. And so, like, that's what I end up doing. I end up helping people, like, find that physical, visceral sense of intelligence, like that their body's giving them information, and then learn how to categorize it. And when it's telling you something about the trade versus when it's telling you something usually about yourself. Because those are the two like, is this feeling of fear like that the trade's changing, or is it that I'm going to lose money? Those are two different pieces of information, right? The trick is to practice with that enough to be able to tell the difference.
What do you tell someone who says, I want to build more confidence in my trading or confidence in the trade, for example?
I'll ask that. Like, we'll just go, like with my clients, I go through the details of trades all the time. Like, what are the factors that are causing them to believe? Like, I mean, I have a client who trades like cross currency funding swaps. I don't actually know what they are, but he will like list the different things that go into his consideration. And as he's listing them, I can tell by his tone of voice, like which ones he believes in or doesn't believe in, or which ones, like if I listen really carefully, which ones might be like he might say something was in conflict with a thing he said a minute ago. And I'll ask him, and he'll realize that he has a conflict. Like he partially believes one thing and partially believes another. And then I'll bring that out in the open and say, let's try to resolve that conflict. And then sometimes it's the opposite. It's like just helping them tolerate the worry. Because I mean, it is, first of all, it's the future. And second of all, it's markets. So no one ever knows for sure, right? You can't be absolutely confident. You should have some worry or concern or doubt. That's only reasonable. And so sometimes I just am teaching people to how to handle that, to tolerate it and not act on it necessarily. Lots of times people are really worried about themselves. And will they end up not only just losing money, but like looking stupid? That's a big one. It always starts out with going, I'm afraid of being wrong, I'm afraid of losing money, but it's almost never actually that. It usually is the implications of losing money.
A lot of retail traders are trying to prove other people that they can do it, or they're trying to like prove maybe their partner that they can make it in trading, or prove their friend they can actually be good traders. How do you handle that kind of pressure and that wanting to prove yourself as a trader?
Yeah, well, I think you have to be honest with yourself, honestly. Like, if your objective is to prove yourself, what's that really about? And how does that have anything to do with the trade you're looking at? Right? Like, you want to prove to your partner that you can be a good trader. So you want a trade to work. So in wanting it to work, you don't acknowledge that you can see signs that it's not working. for example. Your motivation at that moment is more about your reputation, so to speak, with your partner than it is about the trade. And you'll have feelings about both at the same time. The ones about ourselves tend to be greater or more intense because the human brain's job is to keep us safe. Like that's what my brain's doing, it's what your brain's doing. And we do that by predicting what something means to us, like as it plays out, what's going to be the personal impact. And so that's always operating. And the trick is to be able to know what those feelings are versus your actual feelings about the trade itself. And to do that, you have to know what you feel so you can go, well, okay, that's really about me versus I do have confidence in trade. Like, I do think the trade's going to work, or I really don't. Like, I always say to people, let's talk about what you want, what you really, really honestly think, and what you're afraid of. And then try to compare the two and figure out which piece is really about the trade.
Do you feel like it's the same thing to coach a fund manager who's managing like 8 or maybe 9 figures versus a trader who's trading at home like a retail trader? Is it the same things that come into play, the same kind of lessons, or do you have to work on different things?
The truth is, it is a lot of the same stuff because everyone's human. One thing that's a little different is usually the people trading 8, 9, 10 figures are, they do believe in their system, usually, not always, but, they learned it from someone who was successful. But, different approaches work in different market environments. Um, but generally speaking, they have an underlying belief in their way of looking at the markets, which the individual trader doesn't always have. Because, did I learn this? The person who taught me this really know what they're talking about. Like, that's usually a question. I mean, even when I first started, like most of the guy that ran the firm was a scalper. He would stocks traded in eights back then, and he would just trade for eights. And then some people traded like that, and then other people traded more momentum. And I had to go like, well, what's the right way to do this? Well, the right way to do it is the way it makes sense to the trader. But if you're an individual trader, you often aren't sure if you were taught correctly. Like you have a question in the back of your mind. Does this really work? And if you were taught at Goldman Sachs, you don't really question, like, does it work? Because somebody from Goldman Sachs taught you. But day to day, like fear of missing out, fear of future regret. What's the character of the market? Am I getting stubborn? How much confidence? Those things. I mean, everyone's human.
Do you feel like the traders that, or the fund managers, do you feel like they have more support? Like they have people to talk to, they can kind of bounce ideas off? Or do they actually feel like more lonely and they don't really have support that they need to succeed?
Most of my clients, like they have they work at a big hedge fund, and that hedge fund has given them a, a certain amount of capital and a budget to hire a team. So they have, 3, 4, 5, 6, 7, 8, 9 people who work for them. So they have those people to talk to, but at the end, it's their book and their responsibility. Now, a lot of them have like friends from when they were at Goldman Sachs or JP Morgan or wherever they started. And they do all talk to each other. Like they do all talk to each other. Um, but it's a lonely business. I mean, at the end, it's not really a team project because the portfolio manager like says, okay, buy $1 million of this, sell a $500,000 of this within this, at the end of the day, they make the actual decision. And so I think sometimes they find it helpful to talk to me just to have someone that they can just say anything to. And I mean, I had one guy, and this is a different guy than the one I was just talking about. I also don't understand his trades. Like he'll go on and on and on, but I have no idea what he's really talking about. Um, I mean, he does, yeah. Um, but he said, it's so helpful to just tell you all this because it helps me sort it out. And I'm listening for how they feel. Like they're telling me what they think, and I'm listening for how they feel. And so then I'll ask questions that might be, oh no, you sounded like that one piece. Are you really sure about whatever? The German election is going to go this way or that way. This was last week. Um, and then I can hear, or maybe when they're trying to convince themselves. So then I'll try to get them to talk about the thing that it sounds like maybe they're not sure of, even though they didn't realize they weren't sure of it. But in the big picture, I think that's really the only difference is not all, but a lot of the professionals, if you will, were taught by someone who was making money and they knew it, and it was documented and they could see it. So they have an underlying belief in a certain approach, but they sometimes aren't sure. I mean, they lose their confidence in their approach too.
Having that belief of what works because they've been taught before, does that make them kind of harder to adapt or to change when things are different?
I can only think of one client in the past 5 years that I could arguably say has had a hard time to change. And he hired me to help him understand his intuition or to be able to access his intuition. And I think maybe as the market changed in like 22, 23, interest rates started to go up, the AI boom started to happen. I think he was a little bit stuck in his viewpoint that rising interest rates would cause a recession. Yeah, but generally, I don't know. In a way, if I would say anything, these guys are too adaptable. It's like, okay, you have a view. I mean, right now is difficult with Donald Trump, and everyone's been having a hard time, like trading the tariffs. We'll just say, I'm using that generically. Overall, I think people are probably too adaptable. Like, I end up I don't have very many retail clients one-on-one anymore. I teach a course, and so I do have, like, a monthly group meeting, and then I have a guy that works for me, that works with some more retail clients, and, like, I'm always trying to get people to say, "Okay, how do you understand the market?" Like, the human brain actually has the ability to watch markets and make sense of it. That's been shown. Even people who don't know, if they watch a chart, like, build, they will they have a decent sense of what it's gonna do more than they should, more than random. It's because it's a reflection of human behavior. Um, so I think I probably spend more time trying to get people to stick with their way than I spend trying to get them to be more open-minded, if you will.
That's surprising. It kind of makes sense, but I didn't really expect that. But yeah.
Yeah, because I mean, like, when I started and those guys were scalping and whatnot, and I was watching the markets, and I would see that, like, the groups would move together, like the drug stocks would move together, or the oil stocks would move together, or, it'd be like, on the days the drug stocks are moving or the oil stocks, or there was one day when this was back in the 90s, and, like, there was some political thing with Mexico and all the Mexican stocks. I mean, they just started buying them in the morning and they just kept buying them all day long. So I saw there was momentum and I switched and went to Schoenfeld because Schoenfeld was a momentum shop. Like they traded momentum, they taught people to trade momentum, and that just made more sense to me. That still makes sense to me. Um, like I'm a directional momentum trader to the extent that I still trade, and I do a bit, not like and sit in front of the screen all day, but my husband, who wasn't my husband at the time, he learned options trading and double diagonals and this, that, and the other thing, and that makes sense to him. I'm like, just buy the damn puts. You know, I don't need to hedge it. Uh, so I think everybody, it's a game really at the end of the day, and it's these numbers that bounce around, yes, based on actual buying and selling pressure, but people can kinda understand the game in different ways, and you gotta find one that makes sense to you, and then stick with it.
In your book, Market Mind Games, you talk a lot about mental capital and why that's important. Do you want to kind of share and go into why that's really important to build?
Well, like, back in my day, the trading psychology was, figure out a system, trade the trade 20 trades in a row exactly the same, and then you'll just learn to do it. Well, it's not actually true. Like, no one can really do that. Um, because there is the how do you feel about it? Like, do you have confidence in it? Are you well rested so that, like, it's easier to tolerate it going against you or to being irritated or annoyed or, your system goes down or your computer crashes or, like, do you have that feeling that you're able to tackle the problem? That's psychological capital. Like, do you have the feeling that, "Gee, if this doesn't go quite right, I will still be okay." Well, people can cultivate that feeling. You can cultivate it through sleep, you can cultivate it through breaks, you can cultivate it and like, trading results are not the results of the supposed probability. They are the results of the trader's ability to execute. And your ability to execute is a function of, like, how energetic, resilient, competent you feel, all these subjective states. Um, so, someone loses a bunch of money and they're really upset about it. Well, it's like their psychological or mental capital is depleted. The urge is going to be to make the money back, right? So you want to do all these trades. Like, well, that's unlikely to make you money, right? So then you're more and more frustrated. Then you're mad at yourself. Like, and then this is where people will say control the emotion, but what you really should do is just feel those emotions and learn the lesson. So it's not like the human being is not a computer. You cannot program the human being to trade the way someone can program a computer to trade. Now, never mind that when people program computers to trade, um, they have factors, subjective factors in their models. That's a different conversation. But still, you tell a computer to do this and it'll basically do it. Like, it's not going to feel energetic or not feel energetic. But the human being is a human and it's going to have various levels of energy and optimism or frustration. And you'll do better if you take that into account. Like, some days it's best to just walk away. Um, or I mean, I had a trader once, this a long time ago. He's at Goldman Sachs. He only ever traded to break even. I thought this was super interesting. Like, every day he just said, I'm going to break even because he figured if that was his attitude, he would be able to tell when the market was really moving, like when the opportunity was really there. And he would never be too frustrated to take advantage of it. Um, so I used to also try to encourage him to get more sleep because he burned the candle at both ends, so to speak. I mean, he was supposed to go out to dinner with clients and whatnot. But anyway, he came into the office one day. He knew he was really tired. And he said, you know what? I'm going to do what she says. And I'm not going to trade today because I'm so tired. And it was a really choppy day. And he saw everyone around him getting really frustrated, annoyed, and, slamming down their pencils and stuff. And that evening, some news came out and the futures really started to move. And he went in really big, made his year. And he was like, if I hadn't sat out feeling so tired all day and what turned out to be a really choppy market, I would not have been able to do that. So there's that combination of, do you feel, energetic, and is the market doing anything? Like, is there actual money to be made? I'm going to jump ahead to something you may or may not ask me, but this leads right to that. Like, generally speaking, wanting to make X dollars per day or X dollars per anything is dangerous because some days the market's really giving you tons of money to make, and some days it's not doing anything, right? It's like you're a surfer, and are there waves or are there not waves? And if there aren't waves, you can't make that surfboard go. Well, people will say, okay, I'm going to make, whatever, $1,000 a day. But some days you could make 5,000, some days you could only make 100, you know? And I'm not saying it's a bad idea to have goals. I'm saying like the dollar per I get into this with my professional clients. Don't do that. I mean, I have somebody that I say, okay, how would you make $1 million this week? Not I'm going to, but like given your markets, what are the trades you should be in that would give you the most likelihood of making $1 million this week? That's a different question. Where's my most likelihood of making $1,000 today? Well, maybe it's there and not there. Anyway, that's like a specific off the art. Do you feel like well rested enough to deal with I mean, predicting markets is the most difficult mental game on the planet. Like there's name any other endeavor and I can tell you why it's easier than trading.
Do you teach your clients, the fund managers, the traders, to set goals, other kind of goals, maybe like process goals, or just no goals at all?
Yeah, I'm more about like I do like a system like goals, objectives, strategies, and tactics. So that's like what's the big picture goal? Like what do you want in the like what's important to you personally? Um, so some people like a lot of my clients are actually in their 40s and have a couple of young kids. And it's like, I want to save enough money that I know my kids' college is paid for, our house is paid off. Okay, so you want security for your family is the goal. The objectives are, and then the objectives I'll say, okay, how much money do you need to put in the bank for your kids? And then I'll say, okay, given that, what's the strategy? Okay, the strategy may be I'm going to run this book at this hedge fund, trading currencies for the next 5 years. Okay, well, then we get down to what are the tactics? And the tactics are really the specifics of how you trade it. But I like to connect like one's big picture goal for their life to break it down to subparts that are objectives for shorter periods of time. And then say, okay, if that's my objective, like, how am I going to do that? What do I need to do? Do I need to learn something else? Do I need to add options? Do I need to hedge? Do I not need to hedge? I mean, these are things, usually my clients can, they can trade directionally and they can have hedges in the forms of options or, just the opposite trade. And so they usually have an issue balancing how directional they are versus how hedged they are, or how long they are versus how short they are, and which position sizes. So there's like a lot of sub decisions to make, right? Like there's the I'm going to trade this strategy, these instruments, this strategy, but then there's all these other decisions to make. And so we'll develop what we might call goals around some of those pieces of the puzzle. I am gonna start hedging. Like I had a client just this week. I'm gonna buy X amount of VIX calls per month in 2025. So that now is like what we would call a goal to him. I would call it a tactic, but like he has done that in the past. That this year he's going to do it because he thinks at some point in 2025 that'll make him money.
What I'm seeing a lot is traders, or especially retail traders, are trying to build that, like you said, mental capital, trying to build that confidence, the competence before they start to make money. Like they want to have the certainty that they'll make it before they can actually make money. Is it the way you develop it, or do you have to kind of let yourself make money first and then that builds your confidence?
I think you got to make a little bit of money, build some confidence, get bigger in size, go through a period where you lose your confidence because you're trading bigger and so the losses are bigger. learn how to tolerate that, start making money again, and do it over and over and over. When I was at Schoenfeld and there was 1,000 traders trading long short equity, they used to tell us that, like, they would give us X number. You could trade 100 shares, 300 shares, 500, 1,000, 2,500, 5,000, 10,000. They would say every time they raised our share limit, we would lose money for 3 weeks. And this was what they'd seen over 1,000 traders. And it was why, because, you go from trading 500 to 1,000 shares, all of a sudden the amount you lose is twice as big. And you're like nervous about it. You're upset about it, right? And you just have to go through this period where you realize, well, the amount you make is also twice as big. So I think people, if they were smart, they'd set out like an accomplishment program for themselves. I'm going to trade this amount of capital, let's say, and make money for whatever, 3 months. And then I'm going to add to that, and then I'm going to trade that for 3 months. Like it's like if you're learning to play the piano, or I live in a ski town, you're learning to ski, or, pick a thing. People learn, they practice, they get some small level of accomplishment. They raise the stakes a little bit. As a skier, I go down a harder slope, more steeper slope, and you practice, and then you get better at that. For some reason, that sort of normal process of learning, no one thinks to do in a kind of organized way in trading.
So yeah, you think it's normal to lose confidence as you increase your size, which is big because most people don't respect that. Yeah.
But generally what happens is, retail people who aren't responsible to anyone but themselves, they kind of jump all over the board. They'll work on one strategy for a while, and then that won't work, and they'll switch to a different strategy. Or they may decide, they're going to trade this amount of capital every time, or, they don't have like an organized program of learning, if you will, and developing skill.
How would you get a trader to stick to something and kind of be more structured overall, a retail trader?
Well, you need to like look at it like you're learning to play tennis, or golf. In any of those things, everyone understands that, like you're a beginner, you're an amateur, you're a novice, you're an intermediate. We don't think anything of that. If someone decides to take up a sport, right, or learn to play the piano, like that's the way it works, right? You somehow think in trading, we're supposed to learn a little bit, we're supposed to be able to do it. Well, it's the hardest mental game there is because of the uncertainty and the fact that anything can happen. And the game never ends, and, the ball goes backwards. You're not sure it's a good or bad. Like it's such a more difficult puzzle. So here's a story. Like, I don't know. There's a hedge fund owner, manager, founder named Dmitry Balyazny. He owns a hedge fund called Balyazny Asset Management. I used to sit next to him at Schoenfeld back in 1995. However, he did it this way. I mean, Schoenfeld had a momentum method, and they would, say the stocks move in momentum. But he traded 300 shares of stock for a long time. I don't know how long, but a really long time, like 2 years long, where he would buy 100, buy 100, sell 100, buy 200, sell 100, sell 200, buy 100, scaling in and scaling out. And he did that for a crazy long period of time. And then one day he's like, okay, I know how to do this. And he was able to like do a hockey stick in terms of how much capital he could trade. But he'd done it. He'd like, this is what you need to do. You need to scale in and out and I do think scaling in and out is a good way to manage in the big picture because, but that's a whole other discussion. But for some reason, he could see that the thing he needed to do was teach himself to do that. And he didn't tell me this. I sat next to him, but he didn't tell me. He told someone who sat on the other side of me that they would push him to trade more because he traded well. He made money. And Schoenfeld wanted them, but he wouldn't do it until he felt like he really understood this scaling in and scaling out. Now he runs a, I don't know, $15 billion hedge fund or something. I don't know.
Do you feel like the rise of AI and technology overall makes it easier on the mental side for trading, or is it still the same issues people have to deal with?
Well, humans will always be human, and I think the impact of AI is yet to be seen. Like what it's really going to do in terms of markets, like what it's doing. I have some clients who are analysts, like, and their job is to analyze Nvidia, for example, or big stocks like Microsoft or Amazon. It helps them get more work done faster. They can deliver a research report more quickly than they could, but does that mean their boss trades Nvidia more than he did before? Maybe, but I don't think we know yet exactly how AI particularly going to affect the small trader.
Tell me how people can find you, read your book, and where can they connect with you after this podcast?
So I'm on Twitter, X. I don't think I can ever call it X, but um, as Denise K, my middle name, or which is my middle initial, Denise K Shull, Shull. My company is the Rethink Group, and it's the rethinkgroup.net. I do have a course on there that's a pretty good course meant for the average trader and not really very expensive. And then we have these monthly meetings. And then there's my book, Market Mind Games. I wrote Market Mind Games a long time ago. And while it's still like the basic psychological stuff is still all true, like the human brain hasn't changed. Um, I would personally like to update it. I just can't get the publisher to update it. But and it does have a series of fairly serious exercises in to figure out how you play out your self-image in the market. Like, do you expect the market to reward you? The course, which is, of course, is more expensive than the book, is a little bit more up to date from a neuroscience point of view. And, then you do get the monthly meetings and all the recordings of all the monthly meetings. But that's Rethink Group, the rethinkgroup.net, and then Denise K Shull on Twitter/X. Although the truth is, I talk about U.S. politics and health care as much as I talk about anything else.
That sounds good. We'll leave the link below. People can check it out and connect with you there directly. I really appreciate your time here, Denise, for sharing these lessons with me and kind of the listeners as well. Hopefully, they can learn a lot from that, and we can definitely bring you back on in the future and talk trading again. It would be fun.